Perfect. Well, thank you everyone for joining us here today to learn more about Stockton Farm. This webinar is going to officially launch the opportunity, and we're excited to share more. So before we get started, we have the following disclaimer to review with you all. Here's what we're going to talk about today. Overall, we've got a mixed group of investors here with us today. Some who've invested previously and some who are new to the platform. So I'll take some time to introduce our team as well as our platform overall, and we'll dig into the farm asset. Feel free to submit any questions throughout the presentation, and we'll answer those at the end. So with that, here's an introduction to our speakers today. Peppo is going to be running through the thesis on Stockton Farm. He's our managing director of equity investments. He manages the entire sourcing and diligence process for farmland investment opportunities and oversees our underwriting process. He spent the past 15 years investing in and managing farms, making over 30 investments for over $100 million. My name is Melissa Bermudez. I run our investor platform here at FBN. I'm your main point of contact for any questions you have. There's my email, so email me anytime. My background's in finance. I began my career in investment banking on Wall Street and shifted into the buy side, where I was responsible for sourcing and managing almost $1 billion in assets under management. Most recently, I built out the strategy and operations at an agriculture startup. I'm going to ask Peppo and I to turn off our videos so that we're not distracting here as we continue through. So who is FBN? We have been around for 8 years now. Our member network is almost 50,000 strong, and that's grown rapidly as we've expanded our offering to encompass a full platform of options meant to help family farmers become more profitable. In those 8 years, we've reached a valuation of almost $4 billion with investors that include Fidelity, BlackRock, and Google Ventures. We have over 1,000 employees and strong partners in ag that are helping us continue to grow our relationship with farmers and grow our impact as well. I also want to make clear that while we are a startup in culture, we have a team with a huge breadth of experience, including across all areas of agriculture financing, from loan advising and underwriting. We have folks who've spent their entire careers in those fields, as well as in data science and economics. It's this team that all works together to bring you the best investment opportunities we can source. So how do we do that exactly? Well, it starts with our loyal member base. As many of you know, the work of a farmer has only become more difficult over time, as all the players in the ag space have increasingly concentrated their power. So that means suppliers, buyers, financiers, landlords have meant that the voice of the family farmer has become less powerful. This is why the mission of FBN has been so critical, and it's resonated across our members. We aggregate the power of our entire member network, putting farmers first and delivering the best outcome for them so they can continue to feed our country. The suite of products that we've got empowers our member base and builds a sense of loyalty that comes through when our partner farmers need to finance their operations. And this in turn creates better investment opportunities for you with better returns. And truly, it's only by successfully carrying out all sides of this cycle that we'll be able to continue building a platform that delivers a superior return for you with a structure that benefits the farmer. So a bit more about that structure. There are two sides of the coin here, obviously. First is the farmer involvement and interest in Farmland Capital as a financing option. And on the left, you'll see some of the specific financing instances where farmers are coming to FBN. The structure is non-debt financing, meaning the farmer grants an equity option to the investor to purchase a certain portion of the value of the farmland at the end of the option term, which is 10 years. The option structure means that farmers continue to make all management decisions associated with the farm and receive all farm cash flows during the whole period. As a result of that, the farmer receives an outsized portion of the farm value at the time of exit. This structure has a few benefits to you as an investor. One is the ability to partner with experienced farmers. I know anyone that has tried to invest in farmland on their own, you've likely had difficulty finding the right partner to manage that land for you, and that can be a primary factor affecting your success. We take that work out of the equation for you by rigorously diligencing all farmer partners for intended success. The second differentiating factor is the access to the quality of the land. Because farmers are retaining majority ownership, They're bringing us their highest quality assets for the best financing rates and to increase the likelihood of our underwriting the investment. You can imagine where a farmer needs to sell their land for financing, they'd be unlikely to part with their highest quality parcels. Because of our structure, you as an investor are gaining access to land that would otherwise be unavailable to the institutional market. Probably the most important element of the structure is the appreciation potential, which is outlined here and really does come from the structure that we outlined on the previous slide. There is no cash yield as a result of this structure, and that is different from many institutional investment options. In those structures, the return is calculated in what you see to the left here of this chart, which is a combination of the total expected appreciation plus the cash yield from the annual lease. As you can see in that model, the majority of the return is the appreciation. So we really take advantage of that with our structure, which is where the investor, you, participates in an outsized portion of the appreciation. Because of that, the appreciation ends up being multiplied. And in most of our structures, that looks something like a target return of around 13%. And I want to stress here that is based on the same underlying annual appreciation. Though you can imagine in a world where a farmer is owning and managing their land for the long term, that might be different. And so we obviously don't forecast that, but that is certainly a part of the appreciation perspective. So that's a bit about Farmland Capital. But obviously we've talked a lot about appreciation as the name of the game here. So we're going to briefly review the farmland investment thesis. You as an investor certainly need to believe in that thesis. And so we're happy to provide the details and go into kind of whatever questions you have about it. But this is really the key to success in the investment thesis. So as I mentioned, that 5.9% annual appreciation, how does it compare to other asset classes? Well, on the left, the farmland class is the green line, which you can see outperforms any of the more, what I would consider kind of quote unquote boring investments in gold, silver, or treasuries, but with less volatility than the S&P. And on the right, you can see, especially in these kinds of times of uncertainty, the continued appreciation through any of the recent recessions. Also, I know a lot of us have inflation on the mind, and farmland values do correlate with inflation, meaning they both increase as inflation increases, so does farmland value. And we've got 3 instances here to show you where inflation increased at certain rates and the corresponding land value increases. What I would also say is, you might see, especially in the late 1970s period, you might be asking yourself, looking at this land value chart, okay, well, after that increase in land values, looks like they went down. So what maybe is going to be happening next? We do, and you may have seen some of our recent research pieces around why we do believe there are structural differences in the land market now than there were in the 80s. And one of those is particularly that the fundamentals of valuation in the 80s were the values of land in the 80s were not supported by the fundamentals of on-farm incomes. So as you can see in that left circle right in the 80s, incomes were not increasing on farms at the same rate that land values were. And we see that is exactly the opposite case now, that incomes on farmland are increasing while land values are also increasing. A big part of that is certainly inflation. That is something we see as not reversing. When inflation improves net incomes, that impact usually sticks around. And you can also see in the top right of this chart, you as a farmer, you as an investor are investing in the farm at a valuation below current market levels. The farm was actually appraised in June of 2021, and we're offering this investment at cost to investors. So that's just a little bit about the farmland investment thesis. We can certainly go into more details, but for now I'm going to pass the mic to Peppo to talk a little bit more specifically about Stockton Farm.
Thanks, Melissa. So yeah, Stockton Farm, it's a dairy property in Missouri. It's a farm operated, an owner operated property. It's being utilized mostly to run dairy cattle on it, producing really highly productive pasture. It's a farm that has crop optionality too. It has grown grain crops like corns, soybeans in the past, and has the potential to expand those acres going forward. But it was valued as a pasture property, so that value was not incorporated into the valuation of the farm. It's a farmer that has been utilizing sustainability practices that help to improve the long-term value and sustainability of the soil and the system. And as Melissa was saying, this on this farm appraised for more than the investment amount, investment value that we gave to it at closing, and since then it has appreciated meaningfully too. And what investors get here is that they get to participate in 62% of the changing value of the farm, making it a very attractive investment given the trend of land prices since we closed on this, and we're transferring it to investors at cost. The offering size is $132,000. The value per acre of the farm is $2,900. Its value is mostly as pasture. The returns here based on historical appreciation are 14% for the investor, which are also in line with the return that the farmer is expecting with this farm. And it's a 10-year term, but the farmer has the option to buy out earlier, which makes the term most likely shorter than 10 years. So going back to the farm specifics, the farm is we're saying it's a pasture property, but most of the soils on the farm are class 2, class 3, and anything between class 1 and class 4 is typically considered like suitable for crop production. So this farm has really attractive soils, making it like really a high-end pasture property. And the farmer has been using regenerative practices, including manure and compost fertilization. That means spreading back the manure on the fields and putting those nutrients back into the soil. Applying variable rate fertilizer, growing cover crops, using no-till on the fields. All at the end of the day, what all this means is that the nutrients and the carbon go back into the soil, increase the water infiltration, water holding capacity of the soil, resulting in better and more highly productive crops. So if we look at as we're discussing, like investors have the chance here to invest at a lower price relative to today's value. That provides two things, like one, downside protection. There's an interesting buffer in case farmland prices go down, and an upside too. There's already some built-in appreciation here where the investors get to participate. The way we're modeling this is not taking any of that into account, just looking at what has been the historical appreciation of farmland in Missouri since 1940. Basically, for the last 82 years, it has been 6.1% on a compounded basis. Like year after year, land has gone up 6.1%. Land is not made anymore. It's have more people in the world, and that's pushing making land a more scarce and limited resource, and therefore more valuable. So if we look at, like, with that historical appreciation, we're looking at 11.7% IRR. Again, this doesn't incorporate any of the appreciation that has already happened on this farm, which has been way above the 6.1%. If we look at it like in more recent period times, like between 2002 and 2022, the appreciation was 5.7, resulting in an 11% IRR. In periods with higher inflation, if we look back in the 70s, where inflation land appreciated close to 13%, resulting in an IRR of around 20%. And people could argue that that's a more similar time period to the one that we're going through now. And the last one is looking at pasture over the last 25 years in that part of in Missouri, and it has appreciated 5.3, resulting in a 10.5% IRR. So in summary, like with the Stockton farms, investors get access to really highly productive pasture land that has been managed and is going to continue being managed with sustainability practices by the farmer, leading to long-term value creation on the property. The entry price is attractive given the timing of when this was closed and the fact that we're offering to investors at cost. And the deal structure allows investors to participate in that appreciation and incoming appreciation too. So yeah, with this I turn it back to you, Melissa.
Awesome. Thanks, Peppo. And so, yeah, feel free to submit any questions through the Q&A. We've got a couple, and I know I mentioned this webinar would only take 20 minutes, but we'll try to answer as many of them as we can. The farm is available for investment now. The commitments are due by Wednesday, November 16th. Because this is such a small deal, we do expect it to fill up quickly. So please reach out to me with any questions or any interest as soon as you can. So going into the questions here, I'll also just turn back on my video. One of them, somebody that had looked at our prior investment, I'm guessing in Sugar Creek, the value per acre is lower than Sugar Creek. Peppo, do you want to just lay out kind of why there's differences in that and yeah, a little bit more about that detail?
Yes, it's basically a farm with a different use. Like the Sugar Creek farm was a farm growing corn, soybeans. This is a farm used mostly for grazing of livestock, and that's basically what explains the difference in price. Within pasture properties, this is really high in terms of quality, and the entry price is really attractive. Mm-hmm.
Awesome. Great. Why should we care about regenerative or sustainable practices for the value of the farm? I know they sound good, but why does that matter to the value?
Yes. The soil is like a living beast. It has different cycles of nutrients and carbon. It's also cycling in the soil. Carbon is really important because it what makes the soil a sponge and improves infiltration and water holding capacity. So you want to be adding more carbon than what is leaving the system through mineralization. And in systems like these, where you have pasture, you have cover crops, you have reduced tillage, you are actually doing that. You're increasing the carbon content on the soil. That helps with climate trends, but also helps the farm to hold more water and have more water available for the crops. And then the cycling of nutrients is like every time you harvest a crop or an animal grazes some land, takes away nutrients from the farm, and in this case, bringing back the manure to the property brings those nutrients back, and even more than what left. So over time, there's a nutrient buildup in the soil, making the farm also more productive.
Awesome. One just came through that's a little relevant to that. Is the farm using any techniques to reduce methane output from cows, such as food supplements? Do you want to answer that one, Peppo?
Yeah, not as far as I'm concerned about. Yeah, not sure about that. Mm-hmm. We can get back to you.
Yeah, we can definitely get back to you on that. One thing I would say is just generally in a grass-fed and finished operation, which is this is a grass-fed dairy where the cows are out on pasture the majority of the time. There are studies that usually show that the carbon sequestration potential generally, not for this farm specifically, ends up being more meaningful than any of the methane output from the cow specifically, especially because of the density, which tends to be better, as in fewer cows per acre than in a feedlot.
And something worth mentioning too is like the methane that comes out from cows has a shorter life span than the CO2 that goes into the atmosphere that can last for decades and centuries. The methane that comes out from cows typically lasts less than 30 years, most of the cases. So that means like if at the global level we have the same house that we had 30 years ago, like those that methane, it's what is cycling out is cycling in with new animals, so it's not really changing or adding more methane to the atmosphere.
Awesome. You mentioned the timing of the deal as a highlight. Can you explain more about why that matters? Peppo, do you want to take that one as well?
Yes. So the closing of this property was about a year ago, a little bit over a year ago, and since then, Farmland has experienced like unprecedented appreciation. So in that area, based on our monitoring, we're seeing around 20% appreciation since we closed. So that means that return is already built into the investment, and investors get to participate in that.
Awesome. Cool. And I'd also say, Peppo mentioned briefly, but to really emphasize, we do have our own data science models that are really keeping track of both public and private information that help us to kind of see that, which is, I think, super meaningful to allow us to be able to make the forecasts we do, and also be able to share that kind of information with you, because having that insight that we're able to get investors into this deal at a 20% below market value is super meaningful. Got two more here. Actually, one quick one is asking about tax advantages for Missouri residents. I actually don't know the answer to that, so I'll get back to the specific investor with that question. One is about the investment being structured as an option. Especially Peppo, I know you spent a lot of time on the structure of this. Do you want to talk about the rationale behind that?
Yes, there are a few reasons, but one is like farms typically do not produce a lot of cash flow. Cash flow, it's a really safe asset. That's why like people value the farm really highly, and the returns are not very high relative to the value of the farm. So that means those are the returns that the farmer has to use to pay the mortgage, pay taxes, so for an investor standpoint, it wasn't that attractive to participate in those, and the farmer really valued being able to have that flexibility on an annual basis. But for the investor, it was more attractive to participate more in the long-term appreciation of the property, where most of the returns have been in the past. This structure also allows the investment to be more tax effective to farmers that already own land and that are allowing investors to participate in that investment. So, and then also there's a lot of precedent on this type of investments. It's a structure that has been used for over 15-20 years in the residential real estate space. So we felt really comfortable adopting the same type of structure that was really well understood and proven.
Great, awesome. So we'll take two more here. One is about kind of next steps. Generally, I'll answer that one, and the other is about debt financing in the farm alongside the equity component. I'll let you take that one, Peppo. But so to just next steps, and someone out, the specific question I also see is about the copy of the deck. I'll certainly be emailing out a recording of this presentation to everybody to be able to access it. It's just hosted on YouTube, so you can see it anytime you need to. We also have the investor memo, which has a large amount of this information in it that you can consume on your own time, as well as some FAQs about Farmland Capital more generally. And for those interested in investing, the process we have from here looks like the following. One is to, in order to gain access to generally our LPA agreement, more information about the option structure, et cetera, we have interested investors sign an NDA. This investment is available to accredited investors only. So going through the accreditation verification process is part of the process. And then I'll be able to share any of our further materials with more detail. So anyone, like I mentioned, that's interested in investing, please reach out and we'll get started sharing the additional information. And then Peppo, do you want to answer that about the debt financing?
Yes. So this in this case in particular, the farmer is using debt up to 39% of the farm value, which is below the average in the farming industry. So yes, there is a alongside investors, but it's a relatively low level of leverage.
Great. Well, thank you guys so much for attending today. Appreciate the time. And like I said, available for any questions at all. Feel free to reach out. Thank you. Have a good one.